Hey, my name is Michael. Today on our channel we will talk about the ways and types of investment. The first thing that anyone who wants to invest money needs to do is to determine the goals and objectives. If the expectation is to save funds, some projects are suitable for those. Those who want to increase the amount of money or receive constant passive income will have to pay attention to other investment methods. Therefore, before considering specific examples, you need to understand the types of investment and their differences. Only after that, having understood which of the options best suits the set goals, you can choose where to invest your money. Categories of investment methods. Investments are divided according to several main parameters: investment objects, terms of investment, level of risk, liquidity. Investment objects. The main classification that allows you to determine what exactly a particular investor is investing in: speculative shares of enterprises, currency and other objects that make a profit when sold after an increase in value, financial instruments of the financial market that make a profit due to the performance of exchange transactions, real estate, other material values, business investments or copyright redemption, venture investments in potentially successful projects and startups. Each type of investment has its own characteristics and requires a completely different approach. Investment term. When investing money, the investor initially expects a certain return period. According to this indicator, investments are divided into short term, with the expectation of the result within a year; medium term, time of return 1.5 years; long term, the expectation of obtaining a result over a period of 5 or more years. Novice investors with small investments often choose the first option. They need to quickly return the money they have invested in order to invest in other projects. Investors with large and medium capital have the opportunity not to be limited to one type of investment and choose several options with different payback periods. In addition to the listed types, there are also annuity investments. This type of investment allows the investor to receive regular profit, which can be fixed or depends on certain circumstances. Risk level and profitability. These two concepts are interrelated. The higher the expected return on investment, the higher the risk of losing your investment. It is advisable, if possible, to distribute funds to projects, the level of risk of which differs by small conservative investments in deposits and securities, income on which is fixed. Medium moderate risk and the same level of income is given by shares, real estate, and some other objects. Large aggressive high yield investment in properties, the cost of which largely depends on market fluctuations. The risk is the likelihood of capital loss, lost profits, non-receipt of expected income. But the possible return on high risk investments can significantly exceed the income received from conservative species. Asset liquidity. A very important indicator for the market. Depends on how quickly the asset is sold. According to the level of liquidity, investments are divided into highly liquid, highly demanded assets with quick sale, for which you can always find a buyer, are distinguished by a minimal level of risk. Low liquidity objects with long term implementation and slow price changes. In case of urgent sale, they can lead to losses. Illiquid assets with a long sale, the sale price can be either less or more than the initial one. Illiquid assets do not necessarily include those that will not make a profit. For example, premium real estate is gradually increasing in price, but it is quite difficult to quickly find a buyer for such an object with a profit on the investment. Where to invest money. After the investment goals are determined, you can select specific objects. There are many investment options available for private investors, but some of them should be discarded immediately if a person does not have the appropriate knowledge. Investments in antiques, philately or some even more original ways can bring benefits, but only if the person is really a specialist and understands the subject. Otherwise the money will be wasted. Therefore, in the first stages, it is better to choose something that is time tested and available to everyone who wants to invest money. Savings accounts and bank deposits. The classic method of generating income. Bank deposits are the least risky asset. Deposits are reliable, but their annual rate for a long time practically equals or slightly exceeds the inflation rate. Therefore, they can be viewed only as a way of preserving, not increasing capital. If this indicator offered by the bank is higher than in other financial institutions, you should consider the position of the bank itself, perhaps by attracting new depositors, it is trying to improve its position. Second, tier banks may offer higher rates, but in this case there is a risk of reorganization and license revocation. Deposits in foreign currency bring even less interest, and in European banks these indicators are even lower. Therefore, this type of investment should not be considered an investment at all. A similar type of deposits is savings accounts. Depending on the conditions, amount of investment, options for closing an account, the ability to withdraw money, the interest rate fluctuates, but also rarely exceeds inflationary processes. Now accumulation accounts are offered, not only by banks, but also by insurance companies. In each case, a specific situation must be considered. The property. The second most popular investment method in Russia. Such investments are inferior to banks in terms of the degree of reliability, but they can bring large profits. However, the high level of market entry is an obstacle for the majority of those wishing to acquire such assets. The convenience of such investments is that they are able to generate passive income in the event of the transfer of housing to rent. The second option is suitable for short-term investments with high returns and consists in buying an apartment at the excavation stage and resale the object after construction is completed. However, both options have their drawbacks. In the first case, you will need to prepare an apartment for delivery, purchase furniture, household appliances, make repairs. After that, it is necessary to find tenants and then monitor both the condition of the apartment and the timeliness of payments. If the rent exceeds the amount paid on the mortgage, real estate can be bought with a minimum investment in the down payment using a bank loan. This method is good because, in addition to monthly income, the asset itself will also bring potential profit, gradually increasing in price. In the second option, the risk is that the object will not be completed if the developer company does not have enough financial or material resources for this. Therefore, with this option, a thorough check of the history of the developer and his financial statements will be required. Another, so far not widespread in Russia, option of investing in real estate is buying a room in an apartment hotel. It is suitable for those who do not wish to take over the management of real estate. Hotels operate like hotels, managed by specialized companies, and each room is owned by private or legal entities. They are responsible for room occupancy, advertising, building renovation, etc. Investors are offered several programs with a certain percentage of profitability. In the latter case, the risks are not too high, and the profitability exceeds the level of deposits. In addition, hotels are being built in places with high traffic and developed infrastructure, both social and transport. Therefore, over time, an increase in the value of such an asset is required. Bonds. Bonds are securities issued by companies or the government, for which the issuer, the one who issued them, undertakes to pay after a specified time the amount spent by the investor, together with a certain interest. Issuing bonds can be compared to borrowing money against a receipt, where the bond is analogous to such a receipt. There are several types of bonds. The safest non-payment of obligations can occur only when a default is declared or in other crisis circumstances. Municipal. Issued by local governments, funds go to the local budget. Corporate. Bonds of commercial companies, the terms of issue depend on the rating and position of the enterprise. Eurobonds. Securities issued abroad are paid in euros or dollars and are used as an alternative to bank foreign currency deposits. Secured and unsecured bonds are issued. The former are more reliable. When buying the latter, the investor bears the risks of repayment. He needs to check the reputation and credit rating of the borrower. The amount of the investor's income depends on the coupon, the amount of payments on bonds, and the change in the value of the security. The coupon is paid either quarterly or semi-annually. If no payments were made, the amount of coupons is accumulated and issued to the investor when the bond is sold to the issuer. The amount received on the coupon is tied to the par value of the security. The price of the bond after the issue gradually changes, and it can be sold both at a higher or lower price than the original cost. The loan is repaid on the date specified in the issue. Bonds are attractive because of their fixed income, which exceeds the profit from bank deposits. Particularly reliable are government securities and bonds of blue chips, companies included in the list of particularly reliable. Securities of other issuers can bring big profits, but they are also more risky. Bonds that yield tens of percent are called junk and have a low rating. This investment method is suitable for those wishing to have a guarantee of return on investment and an average income. You can purchase them through opening a brokerage account or an individual investment account. Stocks. Investments in securities are made to generate income above the market average. They carry a higher degree of risk than bonds or bank deposits. Shareholders can count on both their resale with an increase in value and the payment of dividends. The size and the possibility of obtaining depends on the financial condition of the company, from the issuer and the decisions of the shareholders' meeting. The meeting may decide not to pay dividends, in which case the owner of the securities does not receive profit for a certain period. Preferred and ordinary shares are issued. The main difference between them is in the order of receiving dividends. In addition, owning shares allows you to take part in shareholders' meetings. Stocks are considered as one of the ways of long-term investment, but you can also use them for short-term investments. In the latter case, the calculation goes not to receive dividends, but to sell securities at a higher price than they were bought. Mutual funds and ETFs. Unit investment funds, or mutual funds, are financial organizations that purchase bonds or shares at the expense of depositors. Each of the mutual funds makes up different portfolios, which are distinguished by some parameters. For example, a portfolio may contain only blue chip or industry specific securities. Income from participation in mutual funds is one of the investment methods based on income above average. It is a highly liquid instrument in the case of open-ended funds that can be sold at any time. Units of closed-end funds can be sold only at the end of the investment period. There are also interval funds whose shares are sold during the period specified at the conclusion of the agreement. The return on a share is determined by the success of the mutual fund and the profitability of the selected portfolio. It is impossible to determine in advance the profitability of such an investment. ETFs are similar to mutual funds in the way they work. Here you can also invest in a group of companies or an industry. But they are more profitable due to the fact that their commission is lower. Precious metals. Investing in precious metals is not buying them in reality, but investing in metal accounts. Buying real bars, coins or products is unprofitable, as it requires the payment of VAT and payment for metal storage. Depersonalized metal accounts do not have these disadvantages. The return on such investments depends on the growth in the value of gold, palladium, platinum, silver, or another selected metal. Over time, their price invariably rises, but it is quite difficult to predict exactly when and how much the cost will change. As a short-term investment, this instrument is poorly suited, but for long-term investments it is beneficial to have it in an investment portfolio. Venture funds and startups. Options suitable for those who are interested in high-risk projects with potentially the same high profit. You can invest money both in a startup that promises high interest rates and in a fund that supports such areas. In theory, such investments are capable of bringing in 100% or more of a profit. However, there is no guarantee that the money invested will not be lost. According to analysts' estimates, no more than 3 out of a dozen of such projects come out on top. There are other ways to invest money, but they are either less accessible for novice investors or require special knowledge. And the listed methods are available to anyone, so they should be included in the first investment portfolios.